Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, couple things. Let's talk about yesterday. Little housekeeping. I'm out of all the swing shorts. We had swing shorts up around, our average was 58.5. We peeled out of those over the course of the day. I didn't catch all of that move. The best I got was 38s, and so for 20 handles, but I didn't hold it down into the 31s. I never catch the very bottom of the move, so that's just life. What we're looking at here, though, is the market is trying to hold the 50% retracement here, the bottom of that original triangle that we drew. Trying to hold the 100-day exponential moving average, and it's having some trouble doing so. I am in a long. I wouldn't call it a swing long. It was an overnight hold, but it's just, it's basically a looking for kind of a fade off of yesterday's big move. I doubt I will have it going into the aftermarket today. I think I'll probably get out of it today. But it's one of those things where, yes, the market is weak. We rallied right up to our area, and we came off of it, but everything bounces, and I would expect us to see a little bit of a bounce in the regular trading hours today. But we are trading between the middle band and the lower band, and that is sell rallies territory. We talked last week. We said we're riding this channel in here. The market is absolutely going to bounce. It's absolutely going to bounce. The issue is, what do the bulls do with the bounce? Is it going to be a lower high, or is it going to be a V bottom here? So what did we see? We saw 1 day up, 2 days up, and then we saw trouble up at this fib level, up at 1669, up at 1670, the support area. This was an area that we had. This triangle has been up here for a long. This rectangle rather has been up here for a long time. We had eyeballed this area, and we failed here. The illustration I did was that instead of getting the 3 big up days here to test the middle band, which would have made this candle look like this, instead you got that, and that doesn't work. And the weakness was persistent. The 50-day exponential moving average came into play that could not take it out, and we got a big down day yesterday. Yesterday was a good old-fashioned trend down day. Really no upticks along the way, just trend down, and we're sitting down on those lows now, and the market is really trying to decide if it's got another leg into it, probably down to the 1618 area, or if we're going to bounce and test, say, 1643. So, that remains to be seen. Is the market weak? Yes. Every one of those issues that's going on with the market is still there. You've got the taper, you've got who's going to be the Fed chair. Now the debt ceiling is starting to creep back into things. You've got Syria. Oil is rocketing. But I continue to believe that we are in such an uptrend that these things are going to get faded and then sold into. So I still, like I said, I expect to see a small rally today. The bottom end of the rally, I would say, would be 1637. The top end of the rally would be probably 1643. I would be very surprised if we got back into testing 47. Testing 47 would be ideal for the bears. They'd like to come up and just make this 38% fib rock solid resistance and then just bag it. Take it down to the 62% retracement down at 1611. So it's been playing pretty good fib touching, as we go. So I'm going to keep an eye on those. It's what's working right now. So remains to be seen. I certainly will not be holding this long into the abyss. And the one thing, I could put a couple things out on Twitter yesterday. First of all, don't short in the hole. Don't short in the hole. And what is shorting in the hole? Shorting in the hole was everybody that was getting excited after 3 o'clock yesterday that the market was going off a cliff like Wile E. Coyote over the Grand Canyon and telling you to short down at 29 to 27. Don't do that. Just don't do that. Every once in a while it will work out. 9 times out of 10 you'll get run over. Okay? The other thing is this. For everybody talking about how this is doom and gloom and destruction, look, this is a blip. The 38% retracement of the total move is down here at 1585. This is a little pullback here. Okay, so we've got to keep things in perspective. A lot of hyperbole always gets thrown around on days like yesterday. Just keep it in perspective, keep an eye on your levels, and trade them. Okay, I really hope everybody can join us after the close today, 4:30. We're doing a webinar. First webinar I've done in about 6 months, so I hope you guys can be there. We're going to be talking about levels. We're going to be talking pivots, talking setups, and an outlook, kind of through the fall where we see the market headed. So please join us. I think it'll be very informative, and I look forward to seeing you there. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. Had a good day in there yesterday. 2-week free trial. Come on in and see if we can help you. There's no obligation. And I like helping traders. I like teaching people, and that's what we're all about in there. Okay, so I hope I see you after the close. I'll be back tonight with an evening recap and back tomorrow morning with another pre-market webcast. Trade them well.